Welcome to the new arrivals. We're soon starting here. Ladies and gentlemen, good day. Welcome to today's GDP Global Webinar on FDI policy choices in a COVID environment. This is actually the first webinar we're doing, a series of 3 prepared for Nigeria. We'll have some more information about that at the end. My name is Christina Knutsson. I'm a director of GDP Global. My background is investment promotion. I'm your moderator today. GDP Global is a niche consulting firm. We have been operating for 20 years from our base in London. We operate through our subsidiary in Johannesburg. That's about 10 years old now. And in South Africa, we have been covering the grounds mainly on Southern Africa, but also in the rest of Africa. However, since about 4 years ago, our chief representative for Nigeria and West Africa advisor, Charles Ughele, who is with us today, has been operational in Nigeria and the west of Africa. Our expertise, just to give you a little bit, a very, very brief intro to what we do, is expert services. We're a niche firm on policy, strategy, operations for foreign direct investment, FDI promotion, international trade promotion, and business development, all tied together. Today, I would like to give a special thanks because this series is happening thanks to Aminu Takuma, who started it off really when he was acting as NIPC's state coordinator. So thank you for getting this rolling, Aminu. As a preamble to today's webinar, I'd just like to say a few words. We are living in something that is totally and entirely new to all of us. Like anything the world has encountered in our lifetime, this pandemic has had a devastating impact on countries' economies, as you are so well aware of, and living on each day. For instance, the travel industry and tourism industry is comatose. We used to be traveling. We would used to do these webinars direct. Manufacturing, reeling from colossal volumes of unsold inventories and stock. Global value chains have encountered enormous obstacles. Our retail chains are closing at the speed of sound. Millions of jobs globally have evaporated. And this is our reality now. Companies, governments are rethinking modus operandi, strategies, operations, and policies at the speed of sound. So what can countries do to recover from this dire situation that we are in, which we will recover from, but who knows? The big question mark is, and how soon? It's all about preparation. So this webinar will address some of the key issues and lead the way towards pragmatic policy solutions from an FDI perspective for Nigeria, especially in this environment that we are in now. I have the pleasure today to introduce you to today's panel. We have Hanna, Director of GDP Global, introducing trade and FDI flows, and he will also deal with the best practice policy actions. We'll cover that area. Afterwards, Nigeria's responses at policy and state level, Charles Ughele, our Chief Rep in Nigeria. And we have the great pleasure today to have Sheriff Balogun, is Managing Director of Shebag Holdings, and he was also president of the Sesame Seeds Association of Nigeria, so really good insight into the agriculture sector. So we'll talk about the sector prospect and the value chain within the agricultural area. And then we'll follow that with a Q&A. Yeah, let me just say, this is some of the key persons that are based in Nigeria and South Africa. We have been working on maybe 100 projects around Africa so far, and you can see the areas we have covered. And these are most strategic, operational, and a lot of capacity building and training in FDI and trade.
Good morning, everybody. Thank you, Christina, for that introduction. And thank you to everyone for joining this webinar on the global economy and the COVID responses, both investment promotion and broader policy responses. It's part of, as Christina said, of our interest and our focus on African economies. And I'm very pleased that so many have joined today with an interest in not only Nigeria, which is the primary interest, but also West Africa and also the countries of Africa. First of all, I wanted to give a quick update on what we understand is happening in the global economy. Many of you will be tracking this on a daily basis, but I think it's good to have an understanding of it from an economic development and investment promotion point of view, with our particular interest in this group of foreign direct investment and international trade. When we look at global economies, one of the key metrics that we consider is the GDP, the gross domestic product of different economies. And of course, you'll be familiar with your own GDP and how that is going to be affected by the current economic pandemic. So I wanted to give some clarity on this, and by this I'm using information from the International Monetary Fund, which has been updated actually in June this year. So first of all, the global economy is now experiencing, as we know, one of the worst global recessions that we have ever seen historically, even over centuries. This year, the global economic growth is likely to be 3% decline, which is actually in global terms is a catastrophe. May not sound like a big number, but it is. It's going to be 5.6% below pre-COVID estimates from the World Bank and other bodies. So that is a huge economic downturn that we are now in the middle of. Growth, though, everyone is hoping that there will be a V-shaped recovery. You can see the V-shape in the chart there. We're hoping that that will be the case, that recovery in global economies will be quick, fast, effective, thanks to policy interventions and global coordination. But even in 2021, the recovery will not be as much as the downside of 2020, which means that the global economy at least will be in a negative growth position for at least 2 years. The emerging markets and developing economies are also forecast to be affected, as well as developed countries. The challenges are that in the emerging markets will still be there, a decline of about 1 to 2% this year, whereas in developed countries, advanced economies, the decline could be on average around 6% this year, with an increase improvement next year of around 4.5%. I want to take a closer look at Africa and in particular Nigeria. In GDP terms this year, the two big economies of Africa, arguably Nigeria and South Africa, are suffering badly. They are likely to suffer. You can see Nigeria is expected to see a decline of around 3.4% of the GDP this year. Pretty terrible. And in South Africa, the figure is more likely to be 5.8%. So 5.8%, nearly 6%, which is really challenging policymakers and governments, provincial governments as well in South Africa. The real challenge right now is for countries to do the best they can to hold on to their economic position. And that's what we're going to be talking about, some of the policy choices. But in the investment promotion space, we want to take a look at things that can be done by investment and trade promotion agencies right now and for the next 6 months, the next 12 months. And I'm also going to comment further on the Africa Continental Free Trade Agreement, which has been struggling to get full implementation. It's a huge challenge. The government of Nigeria officially signed up for this last year. I think COVID and the economic downturn that Africa is now experiencing will act as a stimulus to push forward this Trans-African Free Trade Agreement. Taking a look at the GDP effects in Nigeria, well, we know that following the crash in oil prices in 2015 and 16, Nigeria's economy has been struggling. And those of you who are living and working to promote the economy will know it even better than many of us. This year, then 2020, we'll be predicting a further downturn. So the position is not good. This data here is the GDP purchasing power parity data for Nigeria. And for such a large economy of over 200 million inhabitants, actually it represents the biggest challenge for Nigeria, not just handling the immediate problems, but also the longer term challenges. This chart shows Nigeria's GDP in the bars and how it is likely to decline in the next, the last 2 or 3 years and into 2020. I've overlaid with the dotted line the position for South Africa. So South Africa's GDP on a purchasing power parity basis is more than double that of Nigeria's, but both countries are facing a significant downturn over the last few years in GDP. So that still remains, that wealth creation goal is driving, I hope, all the policies and the actions of government and its agencies. The next one I wanted to cover was other countries, other important economies in Africa. I've put in the selection. You can see here, and I'm pleased to see representation in this webinar from some of these countries, including Mauritius. Mauritius, a very smart economy, is going to suffer quite a bit this year, but the expectations are in 2021, Mauritius will pick up from around a 7% decline this year to about a 6% growth in 2021, which is going to be, under the circumstances, a reasonable performance. Egypt is managing to stay positive. That's the forecast for this year. Egypt is also a very dynamic and strong economy with a growth rate in 2019 of about 5.5%. Its economy, along with Kenya, which is also doing well, the East Africa, North Africa axis of Africa are doing quite well. Kenya and Ethiopia are likely doing reasonably well alongside Egypt, just staying afloat in 2020 and with, reasonably good growth levels in 2021, but not necessarily having to face the kind of economic rebuilding efforts that were needed in other countries. Taking a look now at foreign direct investment, we are all very familiar in this group about FDI, foreign direct investment. We know that it's long-term, usually private sector driven capital investment in productive assets. It's not short-term share transactions in stock markets or overnight trading. And FDI is in desperate need for Africa. Every country needs this form of investment. The position over the last few years, you can see this data is now being drawn from the United Nations. UNCTAD's World Investment Report shows that the trend over the last few years in the developing countries, as actually in all economies, has been downward. There has been a downward pressure on foreign direct investment over the last few years, since 2016-17. So that makes it very difficult to attract, large amounts of new foreign direct investment. This trend that we are experiencing in FDI, it's only going to be exacerbated by the global pandemic. It's expected this year that FDI inflows will be down by at least 40% in quite a number of significant markets. Nigeria's FDI we'll take a look at shortly, but across Africa, the position is going to be quite challenging as it is in the rest of the world. If we look at the rest of the world, we can see here Africa's share of foreign direct investment shown by the green dotted line there. The share of FDI in Africa is remaining low, a substantially low figure, and this is really a problem. And again, this is where we believe that by pushing forward with the Africa Continental Free Trade Agreement, this will actually act as a huge stimulus for foreign direct investment across the continent. In other parts of the world, we can see in the blue, the light blue, Europe's FDI has been in decline. And again, it's going to be very challenging this year, but it's the same too for other countries or other regions, with the exception of Asia. Asia is kind of holding its own, which is a very positive picture when we look at it from a global perspective. But Asia too will be feeling that there is an actual decline going on in the present time. Although Asia, especially China, but other countries will probably find, despite some important business shifts, which we'll talk about, China will still lead the way in terms of foreign direct investment. So now let's take a look at the economies. Many of you who study FDI will be aware of foreign direct investment into Africa. In fact, if you look at the FDI data, which I suggest that you do, across the continent, the Netherlands and France are the biggest foreign investors by FDI stock. Of course, the United States is a very big player. And in fact, of course, in Nigeria, the United States is the biggest investor. And then UK and China have been increasing FDI stocks. China is well known for its interest to invest in, especially in natural resources on the continent. So these still remain the primary sources of FDI, despite the current downturn. And I think it's worth foreign investors and governments ensuring that their relations, their trading positions, their explanations of their policy positions are explained to promoters and businesses in those countries. It's great that African Continental Free Trade Agreement is likely to move forward. Let's hope that continues in the months to come. FDI inflows, a bit more on FDI inflows into Africa. You'll see that East Africa has achieved very interesting and substantial levels of FDI into the continent, as has North Africa. FDI into West Africa is largely holding up, albeit that all these levels are much lower than ideally they should be. Southern Africa has seen the net decline in the last few years. I want to take a look here at the FDI inflows again into Nigeria. You can see compared to other important countries in Africa and in West Africa, the overall performance of FDI traction in Nigeria has not been good. And again, you colleagues may wish to talk about this during this webinar. It's not a great position at the moment. So the prospects going forward, I think we've talked about them already. Economic recovery to some extent, but it will take 2 years at least before global GDP returns to something like normal. And you may well have heard of economists and central bankers talking about a much deeper recovery period. Even in the UK and the EU, the powers that be are talking around a 10-year recovery, given the amount of policy stimulus that's been needed in the most recent months and likely to be needed in the coming years to keep economies afloat, to keep people in employment, and to help rebuild and restructure economies. So we're looking really at an economic recovery, sadly, of between 2 years and 10 years. So the long-term policy requirements are needed, as well as the immediate term promotional activities. The other determinants for attracting foreign direct investment are well explained. This is by FDI markets. As you know, foreign investors will remain confident to invest if they can see that there is good access to the market. The Africa Continental Free Trade Agreement, if that can be moved forward with a greater degree of ratification and implementation, then the African market becomes more attractive than it is today. So Nigeria's marketplace of more than 200 million inhabitants is a great attractor, potentially, but so too would be access to other countries around the continent, as well as new free trade agreements between Africa as a continent and other major trading blocs. Domestic market growth potential, that's another key determinant, of course, and that is low in Nigeria, it's low in Africa. So stimulating economic growth is important. This is another chart from the same kind of subject, what stimulates foreign investment. Political stability and security is very important. Many countries globally, and especially in Africa, have struggled to show good political stability. This is a challenge for every country. It remains, I think, something for Nigeria as a country and West Africa and other African economies to really try and bear in mind. And the more that can be shown for political stability and stability across borders, as well as within the borders, is going to be needed. So COVID responses, I'm summarizing here. We're all familiar. We read about it or hear about it on the news and in social media. We are looking now at the prospects for a V-shaped recovery, but it could be U-shaped, in other words, more drawn out in certain countries. It may be an L-shaped recovery, which means that the recovery is going to take years in particular regions or particular countries. Coordinating the global response is certainly a priority, and many countries are now trying to do that now that the first wave of panic has sort of more or less we've come used to it. But then again, this pandemic is striking back, as we know. In some cases, it still hasn't gone away. So we are still fighting this global restriction caused by the pandemic. All countries need to work together, not just at a health level, but on an economic level to try and improve the situation. This is like a summary slide on my behalf. I put down some policy and priority actions. In the green, the first 4 are for foreign direct investment, colleagues. If you're in the investment promotion space, the things that you should be doing right now, and this is what we find by doing surveys of investment promotion agencies worldwide, take stock of your investors. In other words, do the company surveys, research these companies, find out how they are currently situated, what are they thinking of doing locally, what are their global headquarters expecting them to do, are there any threats or risk to downsizing, or are there opportunities actually to consolidate in your country, in Nigeria, for example. The second one then is to look at business planning, look at your own investment promotion activities. I would hesitate to say rip up the book, but I would say definitely look at your plans, your action plans for 3 to 6 months and your short-term plans for the next 6 to 12 months. That's going to be very difficult given that many government departments and investment promotion officials are not able to work in their offices, that they're having to work again in virtual teams. So it makes that task difficult. The third item there you can see is to reorganize for what's called business retention and expansion, looking after the foreign investors, but also the domestic companies with programs, all sorts of action programs and policy adjustments that will help them stay afloat and, if possible, to grow and adopt new approaches to their businesses in Nigeria in the coming months and years. And then whatever we do, number 4, any further investment that we want to attract, we should not look for quick hits. We should look for sustainable results. That's what we believe is a good practice approach. So sustainable foreign direct investment, all companies should be considered if they have investment projects that will be sustainable over the long term. The next 2 items there in orange are related to the trade promotion efforts. Certainly trade leads, you can assume that these have either dried up or have completely changed. Either way, on the trade promotion side, there's a big rebuilding exercise now to go digital on information and build up trade leads database for your existing exporters and try to provide them with more intelligence-based services, including things like B2B, international trade, and buying webinars, for example. That's the kind of effort that is going on at the moment in many countries to try and link domestic exporting base to new customers overseas. And the last 3 items, I'm not going to talk about them much now, but I do list them there. Reformulating business policies, industrial policy, employment policy, innovation policies. These are the long-term and transformatory policy changes that are needed for every country, the wealthiest and those in the developmental stage. They all need to be dramatically reviewed and sharpened up over the coming months to really help stimulate a new economy. And the final one I would say there is looking after the nation and regional brand. I think that's also a very important step for Nigeria, for all African countries. Think about how the world looks at your economies and are you doing enough to make sure that people are staying positive and happy to consider further investment decisions, investment choices in your country. So colleagues, I'm going to stop there. There is more data which I may provide as a checklist. Given the time, we started a little late. I'm going to thank you very much for your attention so far and turn back to Christina for the next phase.
Thank you, John. Thank you very much for your presentation. Welcome to all the new arrivals. Just wanted to say hello and warmly welcome. We're happy you're here today. A few of you are asking about the presentation, the recording, etc. It will be distributed to you all afterwards, so no worries about that. A Q&A session at the end, so we will try to respond online in the chat box, and we'll take questions at the end as well. So just keep them coming. We love questions. With this, I would like to pass the word to my colleague, our colleague, Charles Ughele, who's the Chief Representative for GDP Global in Nigeria and advisor West Africa. He will talk about the Nigeria responses at policy and state levels so far, and I look forward to hearing you. So do we all, Charles, please come on board.
My name is Charles Ughele. I want to thank John for giving the overview. He's virtually had a helicopter view of the issues. I will just come down home and drill it down to Nigeria. Now, we will look at what the government has done in Nigeria. Various governments, various levels of government have done in response to the COVID-19 pandemic. We review the measures taken and also touch on serious issues that we need to focus on going forward in terms of business, trade, and foreign direct investment. Now, the United Nations Conference on Trade and Development has looked at the immediate, the short-term, and medium term and the long-term impact of COVID on a global FDI. In the immediate, what we see is a complete shock in the FDI market globally. We are seeing tightening of margins. In the short term, say between now and 2021, the foreign direct investment will be hindered. There's going to be serious restriction. Now, in terms of Nigeria, let's drill it down. The major impact of the COVID-19 on Nigeria is that there's global supply chain. This global supply chain was completely disrupted. People couldn't go to work, people couldn't go anywhere. So who is there to man the machines and produce goods and services? That was a major issue. For countries that depend on crude oil, there was a sharp drop, in the price of crude oil. So which also meant that the national budget of Nigeria had to be reviewed from 10.59 billion naira to 10.523 billion, all in a bid to address the constraints brought upon us by COVID-19. Now, the country's economy also plunged deeper into recession. Before now, the country was gradually recovering from recession. But what did you find? By first quarter of this year, where GDP was at 2.2%, it came down to 1.87. Gradual recovery is projected to contract further as at the second quarter of this year, minus 6.1. And by the end of this year, we might end up at just minus 5.4% GDP. So recovery will not come until about 2022. That's a long time away. Now, the supply and demand of foreign direct investment also had a major problem following COVID-19. Government put in a lot of measures everywhere, and the lockdown sort of froze cross-border investment schemes, while multinational companies are looking again at their projects and their projections, just to be sure that they don't come into big loss. So now, James Zahn, the UNCTAD Director of Investment, put it very mildly. Say, look, the COVID-19 epidemic has devastating effect more on developing countries because developing countries rely more on investments in the extractive industries and global value chain projects. And these are the sectors that are worst hit by the economic impact of COVID-19. Now, let's look at the direct impact of FDI on Nigeria. If you look at this chart, you'll see that between the first and the second quarter of 2019, there was a sharp spike in FDI flows to Nigeria at $1.2 billion. Then before the year ended, it came down to 498. That's normally the case with FDIs. It's not just a smooth sailing curve all through. What you find is you find highs and lows of FDIs, depending on the season. But by January of 2020, it dropped further to less than $500 billion. So from the height of $1.2 billion, we dropped down to $427.76 million. So now, with the projections we've had from John and everywhere, it's still going to be bad news for a while for FDIs, especially as it relates to Nigeria. Don't forget, Nigeria's main product and revenue earner is crude oil, and we need to do something about that. The devastation in the global economies has forced some rethinking in macroeconomics. Macroeconomics is about demand, supply, money stock, bonds and markets, financial markets. All the eggheads in economics around the world are taking a second look at macroeconomics. How did we miss it? What can we do? So it is a complete world that has changed that we are seeing. Now, what has Nigeria done, the Nigerian government, what have they done to try to tackle the COVID-19 onslaught? Now, there was a lockdown all around the world. There were no commercial aviation, all flights were banned, everything was a standstill. But Nigerian government still made sure the seaports, that's the core of foreign trade in Nigeria, were kept running throughout the period. hospitality industry completely taken out. Now, Nigerian government created economic sustainability plans, which is a transition between the earlier plan and what they now call, the earlier plan, which was Economic Recovery and Growth Plan. So the total of 2.3 trillion naira was earmarked to fight the coronavirus pandemic. Then quickly, the World Bank saw a window to advance Nigeria a total of $114 million in trade and grants just to assist Nigeria meet their obligations and try to quell the coronavirus problem. We've seen significant investment in healthcare infrastructure. Health facilities were brought up here and there, installed in Lagos, in all the states of the Federation, suddenly to make sure that we tackle coronavirus in containment, management, and prevention policies were put in place. And then the federal government also established measures to support the 36 states of the Federation. These were the actions taken. Okay, now the state governments also were doing so much. The local government were also busy putting up infrastructure, putting up protocols, and putting up assistance regimes for citizens across the Federation. This is what has been done all through. And I want to say this, the measures taken by the Nigerian government traverse all sectors of the economy, whether health, whether aviation, legal, regulatory, all sectors were touched with several policies to make sure that Nigeria is able to cope and the economy kept going under coronavirus. Now you can see the picture to the left. Those are airplanes massed on the runway as if it's a museum or a show activity. That is the way it was. All airlines were grounded all around the world. It was not a funny spectacle. Now, with all the measures the governments have taken, how do we assess them in terms of how they have been effective and what we need to do going forward? In general, the Nigerian economic response has been well thought out and driven and implemented to make sure that we cope with this coronavirus and be able to move on to the next stage. Another major measure that was taken, which is in the previous slide, is that the currency got devalued. That devaluation by as much as 23% between January and now meant that currency is now weakened. It will have a better impact, if you are able to do more in terms of exports. But we can see that apart from crude oil, Nigeria is not really doing much on the export side. And yet another loan from the World Bank. Critics are saying, can Nigeria really continue borrowing ad infinitum? Are structures in place to make sure that these borrowings are well managed, are well implemented, to be sure that they have the desired impact on the economy? These are questions. However, whatever the government have planned, whatever they've done, whatever have been implemented, they are all well-planned measures. But it's going to take a while before we actually see their impact, on the economy and on FDI. Now, this is Guardian newspaper reports, a headline saying bitumen imports got about 300 billion despite huge deposits. This is a major problem for Nigeria. We import what we have in abundance. Now, it is very clear from even that newspaper headline that Nigeria is not exporting enough. We are not doing enough in terms of exports. Clearly, we need to do more. Industrialization is still a dream. We need to do something about it. We used to have industrial estates. Where are they? We used to have several tourism locations. We need to do more. We are not doing more in that regard. And John mentioned the African Continental Free Trade Agreement. It's just been signed. We need to put it into action. We need to implement, okay? And Nigeria needs to play more in the areas of a global value chain. Now, this is just a representation of what the global value chain represents. It means production and distribution of goods and services across countries. For instance, most of the gadgets we use, the phones and all that, they are produced in China, but the software is coming from Silicon Valley in California. So these developing countries need to key into global value chain so that they can play and make the economy to run around very well. Now, where do we go from here? Following coronavirus pandemic, the ingenuity of Nigerians were brought to the fore. We have seen Nigerians manufacturing ventilators, surgical masks, hygiene products, all of a sudden. We can continue to do this, institute them, and export, okay? Because we said just now, Nigeria is not doing enough on export. We are not exporting enough. Standard facilities have been put in place for coronavirus management and containment. They are still makeshift. But can Nigerian government, can we, all the states, can they make all these facilities permanent so that Nigeria becomes a good destination for medical tourism as well? Now, the export gap, we talked about it. Let's refine petroleum products. Let's refine more petroleum products and sell to other countries. Because right now, we import refined products, and the refined product gets exported through smuggling across the borders. So why don't we repair our refineries and then get our thing going? Of course, John's talk about designing a solid strategy for FDI. We need to do it and do it very well. The states and the federal government need to collaborate more. And across the regions, there should be more collaboration so that things can run well. The Nigerian government will need to key very well into the global value chain. This is the way other countries are doing. It will solve unemployment problem. It will solve industrialization problem. It will provide infrastructure, because wherever factories are sited, infrastructures must spring up. Water, electricity, and good roads and what have you. So we must work to improve infrastructure across the country and then also tackle internal security gaps. When Nigeria is mentioned in the global business and FDI cycles as a country that is a true destination. With insecurity that is hampering progress in Nigeria, it's still a major gap that we need to fill and get our country on track post-COVID-19. Thank you.
Thank you very much, Charles, for your insights into the Nigeria situation and going forward. This is obviously a lot of challenges that you're exposing, but it's good to see them there and much appreciated. Going from macro and drilling down to Nigeria, and now we're going to drill down into agriculture. It's my pleasure to introduce you to Sheriff Balogun, who's the Managing Director of Shebag Holdings Limited and President of the Seed Association of Nigeria. Welcome, Sheriff. Very many thanks for joining us today. The screen is yours.
Hello, thank you very much, Christine, for the introduction, and good morning to everyone. John and Charles have done a very great job in showing us the global trend, drilling down to the situation in Nigeria overall, and all the figures that we have seen there. It makes it a very interesting presentation, and we can make our analysis from where we're coming from, where we are now, and what we need to do to get out of the downturn of the economy, even before the COVID, and then much more, which has been made much more worse by the COVID. I'll attempt to look at the prospect for the agricultural value chain so that our colleagues who are in charge of policy will have a close look and see what can be done in terms of getting us to where we need to be and helping to put the right policy to help Nigeria get out of the situation that we find ourselves for now, and hopefully be able to direct attention of policyholders towards the prospect and then areas that need policy in order for us to drive our economy. Now, a typical agricultural value chain is shown in the graph on the screen, according to the African Agricultural Advisory Services. The agricultural value chain involves a set of activities and actors that facilitate the transformation of agricultural product from production in the field to the final consumption by the consumer in such a way that value is added to the product in each phase of the life cycle. You can see the interplay from the graph that we have there, which tries to link land, labor, water, technology to production, post-harvest, handling, processing, and then markets. Now, the graph next there shows the interplay between all the key players. On the regulatory side, we have the various agencies that are involved in regulation, like Federal Ministry of Agriculture, the Standard Organization of Nigeria, NAFDAC, Federal Ministry of Trade and Investment, Standard Organization of Nigeria, Seed Council, and a lot of others that are not there. On the financial institution side, the actors there are Central Bank of Nigeria, development finance institutions such as Bank of Agriculture, Bank of Industry, NISAL, Microfinance Bank, commercial banks, sovereign investment authority, and then private equity firms as well. We are beginning to see some new set of entrants like those who are doing farm crowding, that is crowd investment. Now, we have in the middle there, of course, the agricultural sector itself. All these other people have earlier mentioned are support services to the main sector itself. You can see there's the issue of input suppliers, there's the issue of production, there's processing, and of course, lastly, there's marketing. And then at the bottom also, we have the research institutes that provide support services. Institutes such as National Agricultural Research System, Research Institute for various crops, International Research Institute like IITA, you have the AIRC, you have the NARELs in Zaria and so on. So all of these, have interlinking roles to play in the agricultural value chain. So we must begin to look at policies that will be put in place to drive each of these subsector of the value chain, because the system can always only be viable when we have a complete interplay between all the value plays, and policies must drive each of those, looking at them individually and seeing what would be best put in place for maximization of those areas. So we'll be looking at what is available in terms of the land mass in Nigeria, contribution of agriculture to our GDP, and then looking at some top products that needs to be looked at in total, and come up with policies that having seen those advantages and disadvantages, we come up with policies that can right the positions of all of those. Well, Nigeria has a total land mass of about 9.24 million hectares, out of which about 82 million hectares are arable. Very fertile and can virtually grow any crop. Very interesting to look at that. What are we doing presently? Are we able to maximize production on the totality of that land? And even if we are not doing all, the land that is under cultivation itself, are we able to maximize it? How many times do we crop a year? A country like Bangladesh has a three crop cycle on the same land annually, but what are we doing in Nigeria? Do we need to find a way of doing same? Now, the contribution of agriculture to our GDP is about 24.4%, and it has an annual real growth rate of about 4.1%, with export earning of $1.4 billion, while our food import is about 5.3 billion. So you can see a huge gap there, where we're earning 1.4 billion from agriculture, but we have an food import bill of 5.3. It shows there's a huge gap, and something needs to be done to close this rapidly. Our top 5 agricultural product, cassava. Nigeria happens to be the largest producer of cassava in the world. We're also the largest producer of yam, and we have maize, sorghum, and then millet follows. Those are our top products in terms of volume. Our top 5 agricultural exports are cocoa, oilseed and oleaginous fruits and nuts, milk, cream and milk powder, and then spices. It is interesting to note here that sesame seed is the largest non-oil import earner, foreign exchange earner for Nigeria, followed by cocoa. This is according to the latest statistics from the Nigerian National Bureau of Statistics. That order, cocoa used to be number 1, but has now been overtaken by sesame seed. Our top 5 agricultural imports are also fish, wheat, sugar, molasses and honey, milk, cream and milk powder, and then figs, vegetables, fat and oil. We can see here we're importing fish so much value, while we have all the water resources to be able to grow our fish production. So we need to look at focus on attention on fish as a priority, especially given the fact that it's a good source of protein which is much needed. Nigerian major traded agricultural products. On the next slide here, this major agricultural traded product, according to the National Bureau of Statistics 2020, we have superior quality raw cocoa beans, sesame seed, whether broken or unbroken, cashew nuts, fermented cocoa beans, cashew in shell, other frozen shrimps and prawns, natural cocoa butter, ginger, coconut, shea nut. This clearly shows us what we should be focusing on in terms of traded agricultural products that will drive value for us locally and also internationally. Internationally, of course, because we really need foreign exchange to service some of our imports. And these are the areas that have a natural advantage for us in terms of production. And then demand also worldwide it's big. You can see the figures in Naira in what was earned over the years. According to the Nigerian Bureau of Statistics, at the end of the second quarter of this year, the total external trade by sector amounted to 6.2 trillion, out of which a total of 4.02 trillion was imports, while export had a total sum of 2 trillion. So there's clearly a deficit. There's a trade deficit. We're importing 4.2 trillion, export is 2.3. So we need to work towards a balance of trade in that sense. Agriculture accounted for 7.1% of that total trade, which means total trade in agricultural goods was 493 billion. Given our land mass, we can do a lot more if we focus the right policy in terms of what total percentage of what our trade should be and what agriculture can contribute to that figure. If you look at Netherlands, which is very, very small in size compared to Nigeria, and look at what they're exporting, agricultural product export from the Netherlands, it's over $50 billion. So there's room for us to grow this. Agriculture should be able to set targets to move contribution of agriculture to export to our GDP. Should be able to move that to about 15 to 20% if they're given the right encouragement through policy and incentives and all of that. Now, our share of global production, Nigeria's share of global production, share of production across sectors globally. Cassava, you can see scaling from 1970 to 2018, you can see the rise, cassava. You can see cocoa beans, oil palm, fruit, and granules. Of course, we used to have the granule pyramids in those days in the 60s and 70s. That does not occur any longer, but then our figures in production has gone up. But we're consuming a huge a huge quantity out of what we produce, and some go for export. Cassava, of course, a lot more can be done in terms of improving, adding value to our huge cassava import. Fructose, sucrose, pharmaceutical grade cassava starch. Those are areas that we can improve on and earn. Now, looking at that situation and the scenario for what it is to us now, we can see increased food consumption in Nigeria. Nigeria's share of the global food consumption is 3.4%, which is the highest among African countries. Our population is expected to rise to 400 million by the year 2050. Our annual growth in consumption is 4% compounded annual growth rate. So input depending, there's a huge demand supply gap. And how do we address this? Those are the things that we should be focusing on as policy makers, as policy drivers and implementers. There must be a match to address this huge gap that is inherent and is shown clearly. So looking at all of this provides an opportunity also. Like we said, every challenge is an opportunity. If we look at it, we're looking at the demand-supply gap for key agricultural products. We're looking at oil palm, we can see the huge gap. Rice, of course, the recent federal government program, especially the anchor borrower of the CBN, has helped in no small means to drive up the production of rice across the country. You can see wheat, milk, dairy, and fish. So we need to hone in policies that will ensure that this demand-supply gap is reduced. And that provides opportunity for key players and investors to come in, given the right encouragement to be able to scale up to reduce that demand-supply gaps. However, there are challenges as well. Part of the challenge is decline in processed good agro, which is largely responsible through issues that are stated here. You have quality issues, you have production issues, you have non-compliance with regulations or standards. Then, of course, you also have increasing barrier to export by other countries that see us as competitors. So we need to address this. We should see increase in our process good. Opportunities have attempted to look at opportunities in the value chain, and there are opportunities in production, there are opportunities in processing and export, there are opportunities in services, and then of course opportunity in inputs. These are products here that we have some distinct advantage, and if we hold on, we should be able to increase production and processing as well for export. Tomato, yes, we need to process for local consumption, we need to process for export. Cassava, we're meeting the huge demand. We're doing a lot of processing for gari starch, not doing enough processing in terms of pharmaceutical starch. There's a huge demand for cassava pharmaceutical grade starch, which Nigeria should be able to take advantage because of huge production of cassava in the world. We have sorghum, millet, sesame seed. Sesame seed, we're doing a lot of export, clean export, but we need to look at increased export of the whole seed, and then we need to look at oil production from sesame seed as well. It is one of the best oil for consumption because of its non-saturated fat qualities, and it finds use in the pharmaceutical, beauty sector, confectionery, and so on and so forth. Cocoa, of course, we know that it's the major raw material for chocolates. While we're one of the biggest producers of cocoa, we're not doing much in terms of processing chocolates and other derivatives from it. Now, so it's a huge opportunity to in the processing and the export. So we have to have the right policies that will encourage export, that also encourage processing. The infrastructure needed to set up industries has to be right in terms of roads, electricity, and other challenges which we face. In area of services, we have huge gap in the number of tractors that we have across Nigeria. So that is also an opportunity for investors that can provide tractorization services in terms of having their own machines and just going across to provide services to the farmers on a need basis. Insurance sector, the finance sector, logistics, mapping, extension service. Even though extension services was provided mostly by the agricultural development programs of the various states, but there's room for private sector involvement in provision of extension services, which can be done in more efficient manner, and there's money to be made because farmers really need those extension services. There's a debt of those provision of those services. Mapping and GIS also, with the increasing use of technology to provide information on mapping and GIS, drones such as drone services. These are areas also that provide value and drive investors into those sectors and also create jobs, create a new set of agripreneurs that can provide those services. And logistics, yes, we don't have enough trucks and transportation across the logistic value chain, moving goods from one part of the country either to the ports or to the markets where they are needed. There is a need to fit transportation to the various crops. So what you need in moving tomato might not exactly be the same that you need for moving sesame seed or groundnuts. So we need to have specialized logistic providers that will provide solutions to fit the particular crops across the various locations where they are needed. The data, of course, consolidation, acquisition, and consolidation of data is key now. Data is what you need to be able to have adequate planning to do whatever you want to do extensively. You can mine the data and use it to target certain needs and purposes. And so provision of acquisition and distribution or sale of data is another area in the value chain that can be driven with good policy. And when you look at input also, we have a need for input. We have those who can provide chemicals such as herbicide, insecticide, pesticide, and so on, fertilizer. And that's a huge subsector of the value chain itself. But we need to, find ways of putting good policies that will drive investment into that sector locally instead of importing. It's predominantly done presently. Seedlings also as another sector, subsector that we need to look at how to encourage also people to come into that provision of seed and seedlings. A lot of what is planted are grains, but there's an increasing awareness that you need to have the right seed. Without the right seed, the foundation to agriculture itself is fraught. So we need to have a policy that will promote provision of seedlings as a business. And of course, packaging, which is key for whatever we do. We need packaging. There's opportunity for packaging companies to set up with a focus on, producing packaging that will suit the various products. Also, that as a service is required in the agricultural sector, as not everybody who is in the sector will be able to set up packaging, or do not actually even need to set up packaging. But if we have like a service center where you have a few companies producing those various packages that are needed, that is also there. But I think we need to look at that as packaging is key in terms of export, even for local consumption, and also for the well-packaged product will last longer and provide more value addition. So these are areas in terms of opportunities that we need to focus on. Well, thank you, ladies and gentlemen. Of course, I'd like to acknowledge my references that I've made here from the PwC, World Bank, FAO, Bureau of Statistics, the National Sesame Association of Nigeria, of course, FMT, FMARP, AFDP. I'd like to thank my colleagues who had spoken earlier before me for their wonderful presentation, and thank you for listening. And I hope that at the end of the day, we'll be able to have gain some insight into what we need to do and the policies that we need to put in place to drive our economy, and especially through agriculture, as agriculture is an area that is renewable, unlike oil that is not renewable. And agriculture used to be the main driver of our economy pre the oil days, and hopefully we should be able to set it back and bring it back on right track to be a major earner of our economy and an instrument to create jobs and bring people out of poverty. Thank you.
Hello, thank you very much, Sheriff.
So, John, do you want to go ahead with part 4? You wanted to just mention a few words about training and retraining and GDP know-how.
Colleagues, please think about your Q&A. Even put your hand up if you wish to say something. We have a few minutes. Just make a message in the chat that you wanted to make a comment about your particular viewpoint or a question that you want to actually raise for discussion. Whilst you're thinking about that and adding your points in the chat, I'm just going to highlight a couple of other things that maybe we can advise you of in the coming months. Across Africa, we are running a webinar series. It's there to help those involved with economy at the highest level. We're looking at policy matters, especially for trade and investment, but also in things like employment, industrial incentives, education, and of course, innovation. This global webinar series also has at least 3 webinars focusing on West Africa. So I hope you'll be happy if we keep you informed about those. Our own website, without wishing to overplug our own activities, but at our website, you'll see that we have a lot to offer in terms of learning, e-learning. We have a dedicated training platform for both the private sector and also for public sector officials who are interested to develop their insights in all matters economy. So again, please take a look at that if you wish, GDP Know-How, and we'd be happy to show you around and let you sample the e-learning capabilities there. If you are more interested in some of the big issues that we've talked about, for example, on how to develop Nigeria or your part of Nigeria as part of global value chains, we'd like to hear more, and maybe we can contribute to some of your thoughts. And the same goes for assessing long-term performance objectives. that you have for your state or at the federal level or a national level in some way, we have some capabilities there which we could perhaps discuss with you. So thank you very much for commenting and joining this webinar. There are a couple of people who would like to make some comments. First, Christina, maybe we could turn to John Walden in London, I think.
Sure, thank you very much indeed. My name's John Walden. I'm Principal Consultant in Customs, Export Competitiveness and Trade at Crown Agents. And I've been really interested in these presentations. They've been fantastic. I would just like to make an observation, kind of maybe bringing it all together a little bit in relation to Nigeria. I think, you know, many of us feel quite frustrated that in relation to trade in Nigeria, over the years, we discuss the same things over and over and over again. And my recent involvements have been, last year I was doing a program with Nigeria Port Authority, and before that I was working on the USAID Next program, Nigeria Expanded Trade and Transport, which looked at the Lakaji trade corridor, Lagos-Kano, Jabaya. And the point I want to make here is that, as we all know, international supply chains have four components: commercial, transport, regulatory and finance. And the weak points are always the connectivity between those four pillars. And of course, this is what we've seen in the trade corridors in Nigeria. And what worries me is, you know, for example, we know that Nigeria Customs Service are doing some good work. They're trying to digitalize, but we also know that, you know, we've heard so much over the last 10 years that single window platforms resolve everything in relation to quick clearances. But the global story is they don't. They're a platform, but actually they're not bringing the benefits anywhere in the world that was previous. So you really have to, because there's no point basically, you know, NCS can clear a cargo in 3 minutes, which, you know, is possible in many countries. But the fact is, if you can't evacuate that cargo from Lagos port, you're wasting your time. So the point I really want to make is that, you know, when looking at, for example, increasing exports from Nigeria, it's really important to look at the connectivity between commercial, transport, regulatory and finance components. And I think a very, very big part of that is going to be to build the new port. You know, Lagos is not fit for purpose. None of the ports in Lagos are fit for purpose. The intermodal connectivity just isn't there. You know, we've been talking about rail intermodal links for many, many years. The government's always about to sign the PPP to enable that to happen. I think now there's about one blockchain per day that goes from Lagos to Kano, which isn't nearly enough. I really think too, it's the business enabling environment. You know, all the points made about the agri-value chain is hugely important, but unless the business enabling environment is right, then I really can't see Nigeria increasing its exports substantially. And also, you know, and of course, policy links into this in a very, very big way. Nigeria is the only country in the world, for example, that says exports have to be contracted under FOB Incoterm. You know, they mean SCA, but the rule says FOB. You know, it's crazy. That's a barrier to trade and it's a barrier to competitiveness. So that's what I wanted to say, really. And I hope these issues can be resolved in the coming years. I think it's, you know, Nigeria has so much potential. It's really got to resolve this business enabling environment before that potential is realized.
Thank you, John. I think I would like to thank you very much. That's very insightful. And of course, it's a key aspect. I'm just seeing a comment here from Aminu Takuma. He's at the NIPC. So he's saying government and private sector already look at Calabar and Barutu ports development, although fully private sector funded. I'd like to open up for Aminu. Let me see if I can find you here. There we go.
Yeah, sure. Thank you, Christina. And thank you, John, so much. I'm so excited that this webinar is possible. And I hope this is the very beginning of many webinars to come. John and I met a long time ago. I'm talking about John Weldon during the next program, that is the Trade and Transport Program. And it's a success because it has brought down the cost of doing business along the Lakaji corridor. Now, speaking to the ports that we've spoken, that he spoke about, federal government is already speaking with the private sector for the private sector to fully come in to fund Barrow Port, Burutu Port strictly for solid minerals goods, you know, and then the Calabar Port is actually being driven by the state government itself. It has come to Abuja several times to speak to the federal government. And so right now what they're doing is they're out there looking for the private sector that would come in and partner with them. This is the little I have to say, Christina. Thank you for giving me the chance.
Thank you, Aminu, for those words. And I would like to thank you again now that we have you online, because hadn't been for you, this wouldn't have come off. Whilst you were at the NIPC role of state coordination, and we started off with this discussion about, hey, we should do some webinar. We have to touch on some subjects here, and we need to get the information out, and we need to get, you know, collaboration. We're very happy that it came off. And yes, there is a series of webinars. I'd just like to take this opportunity, if I may, to mention that the next one is on the 3rd of October, and that's about FDI and state economic prospects. And the third webinar is on the 5th of November. We're trying to keep first Thursday of each month. And the 5th of November is the third webinar on how to promote and secure FDI from a Nigerian perspective. So welcome to join us in those series of webinars. Thank you for coming along and for your questions and for your patience. We always have a little bit of technical glitches, but that's, you know, part of life. So no problems. I hope you found it interesting. I would like to welcome you back to the next session. Keep your eyes open for our communication. Don't stop promoting. You can't stop it. We are facing challenges, but we will overcome them. There would be opportunities for so many things, and FDI for Nigeria will have to grow, and as trade. Thank you all, and thank you to my colleagues for presentations, Charles, Sharif, and John, and hope to
see you again October 8th. October 8th for the next section.
Okay, October 8th.
Bye-bye.
Thank you, everyone. Bye for now.
Bye.